Good morning everyone and welcome to this edition of Market Fatafat. I'm Avan Dubash. It continues to look like a dull day as we started off the week on a fairly tempered note. 11,000 long gone, 10,890 on the screen. The Sensex is off by 117 points and it's deep gashes which you're seeing for the broader end of the market. But we're here to identify all of the stocks that you should keep on your radar, what's in news, what's buzzing and what is looking good on the charts. Let's bring on board then my colleague Mubina Kapasi, there's Kunal Bothra as well as Samit Chavan and Siddharth Bhamre joining in. Well, let's get started then, and media certainly has been the cynosure of all eyes, but today we're talking multiplex stocks. Mubina, it's PVR in focus.
Oh yes, that it is. This after reports have suggested that PVR is rather looking to raise around $100 million via a QIP or a qualified institutional placement. It has in fact even appointed investment banks like Kotak Mahindra Capital and CLSA to manage the fundraising process. They have already held conversations with various prospective investors. They are likely to even hold domestic road shows to meet with investors and likely to offer or rather likely to launch the offering soon. That's of course if market conditions are supportive for trade. What are they going to use the funds for? Well, essentially various purposes. This is inorganic growth. Persuasion as well is something that they're going to look out for. Remember that on 21st December the board had already approved raising 750 crores and now it looks like they're going ahead with the plans for the $100 million QIP.
All right, that'll be interesting. Fundraising plans on the anvil. The stock though is taking it easy in trade today at 1466. Well, let's shift gears then and pull up an IT stock. That's Mindtree, currently quoting at 904. Kunal, what's your technical take?
You know, the Nifty IT space has been doing extremely well, and if I'm not wrong, this is the 6th consecutive week where you're seeing the Nifty IT, gaining up week after week. So I think, most of the IT stocks, they're trying to act as a, sort of a hedge or a contrarian bet in this market volatility. Nifty IT today has been doing pretty well. Mindtree, I believe, is one of the few stocks which is now showing a bullish pattern breakout. It's forming a bullish, flag pattern on the daily charts, and I believe that the stock is due for a breakout on the upside. Would suggest a buy on Mindtree for a short-term target of 950, and stop loss could be placed to closer to 888 levels.
All right, that's the take coming in based on the charts. It is Mindtree in focus. Meantime, Dilip Bilkon as well. The company came out with their numbers. You have that stock which is in focus, and in fact it's holding out by about a good 5%. Well, Samit isn't with us right now, but his take is that the stock is going to bounce back, but as of now, avoid any fresh long positions. The stock could correct further after hitting 538. To stock number 4 then, and let's focus in on the entire ADAG basket as well. Remember that has been in focus of late after our Reliance Communications filed for bankruptcy. The latest in that being that the board has taken a meet where they've decided that they will be taking legal steps after the massive drop. It's not actually Reliance Industries, it's the ADAG stocks that I'm talking about, the likes of Reliance Communications, Reliance Power, Reliance Infrastructure. They're going to take legal steps after the massive drop in shares, and they said that they're going to try to protect the shareholder value, and that the action that's been taken by L&T Finance and Edelweiss has been illegal and motivated. Remember, these stocks have been through a thrashing. Now a penny stock, Reliance Communications, is at 5 rupees. You've got the rest of the basket as well, which continues to languish under pressure. That's the ADAG pocket for you. And moving on then, Ujjivan, Siddharth, let's talk a little bit about the trends here.
Well, financial space and NBFC space is under pressure, and we can see it across the board. Even some of the blue chip names in this space or in this space are correcting. Now, Ujjivan, this is 3rd consecutive day of correction, and we are seeing fresh formation of short position, not just today, around 12-13% rise in open interest with fall in price, and we are not seeing any intraday recovery also in Ujjivan. So this stock is seeing some formation of short position under pressure. We are not seeing any support on charts also till 220, 230 odd levels, which is further 10% down from current levels.
All right, that is the take coming in on Ujjivan, nearly 4% down at 258. Meantime, Kunal, let's also talk a little bit about the kind of breakdown that we're seeing in BEL.
Mid-cap names which showed a lot of promise in between the last 2-3 months, where the stock bounced off from 75 levels to almost 95, 96 in as a matter of fact. But now it's trying to break its low again. Now in the process of doing testing the highs and then breaking the lows again, it's forming a bearish triangular pattern or bearish flag pattern over the longer term charts, and this could be a severe breakdown for the stock price. It's also trading below its long-term averages since quite some time, so that's also going to add some bit of more pressure. BEL could be shorted at current levels, and if the stock breaks those crucial levels of 75, targets could be kept at 70 and below.
Okay, keep an eye out on those levels, target 70 and below. Meantime, let's focus in on autos, and M&M in fact came out with their numbers. We saw the management as well speaking about the growth prospects. They were fairly optimistic. But what does the brokerage community have to say, Mubina?
Well, most of them do have their positive stance, like Goldman Sachs, BNP Paribas, both have a buy, whereas Morgan Stanley, Credit Suisse, JP Morgan, all of them have an overweight stance. So not that bad after the company delivered its numbers on Friday during market hours. Nomura has a buy with the target price, however, being lower to 881 rupees, as they say that the new launches are going to drive auto growth. They are factoring, however, that tractors slow down, but they do see stronger UV sector growth in FY20, and of course even potential success in electric three-wheelers would be a key catalyst. And for FY20, they are betting on Murazo and XUV 300 to really lead the growth. We also do have CLSA that has a buy. They as well have cut their target price to 850 from 900 rupees. They again as well are flagging of the uncertainty around the tractor segment, but SUV according to them is seeing good initial bookings, and the margin pressure as well according to them will ebb off a bit from the first half of FY20.
All right, there you have it. That's the take coming in on M&M and what the brokerages are saying. Meantime, take a look at Apollo Hospitals from 1290 to 1192. Samit, what exactly are you advising one do with this stock now?
Recently we saw some kind of consolidation in this stock with positive bias. However, with today's correction, the stock has now breached its key near-term supports, which was around 1250, 1240, and it has now slipped below its crucial EMA as well as daily 89 EMA, which was placed around 1220. So it has broken all its near-term major support. So we believe that any bounce back from current level would be an exit opportunity. The stock may head towards 1140, 1130 over the next few days.
All right, 11:30 even on the cards. That's the word coming in on Apollo Hospitals. Let's shift gears then and talk about media, and a stock that is sure dazzling in trade today is Sun TV. A healthy subscription revenue has driven their top line. The subscription revenues have come in higher by 24%. The overall top line growth at 904 crores, growing about 32%. You also have the operational performance that has been healthy. Margins coming in at 73%, with the EBITDA growing 35.6%. Ad revenue growth has come in higher by nearly 13%. The management is very confident on their OTT platform driving growth, garnering subscribers, how their Bengali, and Marathi channels are likely to break even very soon. And the stock price as we speak is holding out comfortably in the green, 563, 8% higher and counting on Sun TV. Moving on then, and it's NTPC. Quite a divergent trend today. In tandem with the rest of the market, it's lost quite a bit of steam. What kind of formations are we seeing today, Siddharth?
Needless to mention that these are short positions because NTPC generally doesn't disturb its open interest too much, but today we are seeing around 9 to 10% built up or more than that, which is unusual of NTPC, and now it has decisively breached its support around 130, 135 A1. And we are seeing PSU stocks underperforming, be it power, utility, or even as a matter of fact banking. So PSU stocks are under pressure and NTPC is no different.
All right, watch out. That's the take coming in on NTPC. Meantime, let's focus in on Escorts as well. And Kunal, let's understand, where are you placing your targets and stop losses here? What's the verdict at 634?
So the stock is now nearing a very crucial level in terms of technical charts. 620 is the crucial support for Escorts. Over the last 1 month, I think from January 2019 start, the stock has been making a pattern of lower highs and lower lows, and the 620 could now be a very crucial test whether the stock breaks it. If the stock breaks this level, then it could continue to drag lower, and that could result in the stock even coming to those lows of 550, 570, which it made I think mid of 2018. So I think 620 is a very crucial support for Escorts. Would recommend a short only below those levels for a target of almost 550 to 570.
All right, keep an eye out on Escorts, short below 620. Watch out for levels of 590. Moving on then, it's Thermax that came out with its earnings. Mubina, take us through the quarterly performance.
Well, you could say that it has been a decent set, although on the margin front they have disappointed a little. So we do have top line growth, which has come in at 16.5%. The figure has come in at around 1,467 crore rupees. So that's a growth of 29% versus 1,140 crores. EBITDA has grown okay, but it's really not been able to match the pace of the revenue growth at 107 crore rupees, and hence you did have a bit of margin compression, 7.5% versus 8.3%, and the profit growth has been able to really keep up. So 29% growth on the bottom line at 75 crore rupees. So it's really not been that bad a set, but yeah, the stock price is down by 1%.
Yes, indeed. The stock price is looking a tad jittery at 1,076. Moving on then, let's focus in on some mid-cap stocks that have really fallen flat on their face, and Thyrocare being a case in point. 8% down, good opportunity to enter, Samit. What's your advice?
Not at all. Certainly one should stay out from this counter. Recently we have been seeing massive destruction in the broader market. However, in this period the stock has been consolidating in a range, but today it has succumbed to that selling pressure. Now it has broken down from its major multi-year support level, so any bounce back is an exit opportunity.
Alright, Thyrocare completely avoid right now. It's an exit call coming in. Meantime, there's Nalco as well that's in focus on the back of earnings, and this stock has taken quite a hammering. It's at the lowest point of the trading day. That's a 9% downtick. The profits have come in low by 58% on year at 301 crore rupees. Do remember though that the previous year there was an exceptional gain of nearly 800 crores. Revenues have come in high by 13%, 2718 crores, the only that has come in, and you also have the margins. They have managed to grow to 18.8% versus 14.4%, but the street clearly reading into that profit performance down 9%. In fact, let's hear it then from the management on the revenue guidance going forward.
Yeah, we are likely to clock a sales turnover of 12,000 crores, and our profit projection is up to third quarter we have got net profit of 1499 crores, and we are hopeful that we will be making around 1650 plus crore profit during the entire year, and in 1920 the next year our profit projection and our turnover, we are expecting there will be some incremental growth in the turnover, because volume, a little more volume will come in terms of the aluminum sales. And in case of alumina also, we are trying to take it from the step of 21.5 lakh ton to a little more than that. So some volume impact will be there, and we are expecting that with the return of market to its fundamentals, the wait and watch which is getting followed by the customers, for which the prices are in a downward trend, that will be over, and there will be buying activities will start, so that at least some extent of firming of the prices will be there, so that level may little increase. So these two factors will also help from the price point of view. Then we have to see what kind of a exchange rate it is coming. So with all these factors, some growth in the turnover we are expecting in the next year as well.
Welcome back to Market Fatafat right here on ET Now, and the countdown continues. So let's focus in on the next stock then that's in focus from the broader end of the market. Samit, would like to get in your views on United Spirits in the red as we speak. How much further can it go?
This has been continuously declining since last few days. However, today's close will be quite crucial. 538, 540 and down support level. On an intraday basis, yes, it is trading below that. But today, if it's closing below 538, then we would see this correction getting extended towards 5. So today's close would be quite good.
The stock has the potential to correct further, says Samit, and even can breach the level, can continue to crack further in trade. Let's move on then to ONGC from the large cap universe. Why is this catching your eyes, Kunal?
It's a very low beta stock, so generally the stock trades in more of a consolidation phase, especially when the market gets more stock specific or sector specific. But what you're seeing on charts for ONGC is that 2-month-old consolidation is now getting over, and the result of that consolidation is on the breakout on the downside. It's now very close to breaking its support of 138, 137, 136 on spot levels, and I think if the stock closes below those levels, it could confirm a breakdown of sorts for the stock, and that should be crucial from a trading perspective. Would suggest a sell on ONGC below those 136 levels for targets below 130, stop loss at 140.
All right, that's the view coming in on ONGC, currently clutching onto the 140 mark. Meantime, Mubina, let's talk about Cochin Shipyard as well and the kind of numbers that it delivered.
Well, I think mostly it's been an inline set of numbers based on what analysts were expecting. It's reported a growth of 16.5% in its revenues. The growth in revenue was mostly driven by the shipbuilding segment that grew a neat 35.4% at 552 crore rupees in the quarter, while ship repair segment on the other hand did see quite a degrowth of almost 20.7%, coming in only at 164 crore rupees. On the profitability front, the margins were at 22.1%, a very little change from the corresponding quarter at 22.3%. The PAT growth was at 18.1% against 18.6% at 1,114 crore rupees. So overall, results more or less in line with what the analysts and the street was expecting.
All right, there you have it. That's the take coming in on Cochin Shipyard, down about 2% after its numbers. Meantime, Bharti Infratel really seems to be looking rather muted in trade today. What exactly is your view, Samit? Do you believe that one can continue to see some sort of consolidation kicking in?
This stock has been clearly bucking the trend this last few weeks. Has been showing its strength. The kind of move that we saw in the last 3 weeks, it is quite remarkable, despite the fact that the broader market seeing massive restrictions. Overall, if you look at the monthly chart, it is positively for the chart is quite strong, and quite importantly, this up move is backed by a very strong volume. So that's a sign of strength. Any pullback move towards 310 according to us would be a good point for us.
Right, that's the level to watch out for that you can look to enter into Bharti Infratel. Well, let's move right on then and focus in on Eicher Motors. In fact, that stock has had quite an interesting move. It got off to a very tempered start, then scaled up, and now is managing to hold on. So we're expecting numbers today and largely going in with very tempered expectations. Consolidated revenues will remain flat, largely led by the 6% fall in the Royal Enfield volume. So that's seen at 2290 crores. Profits as well, no great shakes. 523 is what we're expecting. Margins as well are seen contracting due to the lower scale, the launch costs and the increase in the input costs. So we're working with 29.7%. The consolidated profit as well will be hurt by the weak performance in Royal Enfield and VECV. So by and large, not going in with great expectations. You have seen a rough ride for Eicher Motors so far, the kind of auto sales numbers, the kind of RE figures that it's delivered, and that's the reason that the stock is at the 20,000 mark, but holding out in anticipation of its earnings, at least as of now. Moving right on then, KRBL, and that's a stock from the mid-cap universe that is seeing acute selling pressure today. Samit, from 328, where does it go?
This stock has been consolidating for the last few weeks, and if you look at the overall trading range, it has stuck in the boundaries of 370 to 310. So unless we see a decisive breakout happening from this range, the consolidation is likely to continue.
All right, watch out for that in consolidation mode. 310 to 370, that's the range. Moving right on then, Kunal, you're flagging off a banking stock, and that is Federal Bank. Just let's get in a view as to how much more correction is on the cards.
So the stock was as it is, correcting, I think, from those January, highs of almost 96, 97.5. From those levels, the stock was already in a, sort of a downtrend. But now, after today's, swing breakdown, support break, I believe the stock has now, completed a bearish head and shoulder pattern, and that I believe itself could, have some bit of more negative, implications on the stock price. I would expect that the stock could correct to levels of almost, 80 and below. 77, 78 could be a near-term target range for Federal Bank. Would recommend a short, at current levels as well.
No. That's the view coming in there on Federal Bank. Meantime, JK Lakshmi Cement is also in focus in trade today, and you're seeing quite a bit of a reaction. What exactly, Mubina, have been the quarterly numbers?
Well, it's not that bad. Revenue growth of 11.7%. Volumes as well have been ahead of estimates. So on the top line front, they've done well. Margins did compress by about 100 basis points and the profits grew by 72%. Now, Morgan Stanley, however, has an underweight stance with a target at 230 rupees. As they say, they are surprised by the 2% sequential improvement in blended realizations, but those gains have been offset by higher per ton cost, primarily other expenses. So the EBITDA per ton declined 4% and was flat sequentially. 4% was a year-on-year drop, and hence they have an underweight stance.
305, that's where JK Lakshmi Cement is at. But with that, we'll wrap it up then right here on Market Fatafat. So thanks so much for watching. Stay tuned for Markets at Noon.